Hello, everyone, and welcome to another NPDA Edge webinar. My name is Dave McMahon. I'm the Executive Director of the NPDA. Pleased to be joined today by Tony Altieri from National Powersport Auctions. He's the VP of Business Development there. And hopefully, if you're not developing your business with Tony and NPA at the moment, you will be here after you get a little smarter with our webinar today. So we've got a fantastic lineup of dealer and industry attendees coming on board here. So appreciate everybody taking the time and hopping on. Wow, great to see a lot of familiar names and faces on the list as everybody gets situated here. Thanks for hopping on, Wendy from Florida. Appreciate that. We have all kinds of different states represented. So yeah, if you guys if you want to hop on the chat and just let people know where you're coming from, that will be helpful to get you engaged. As you guys know, you're not going to break the thing, so don't feel bad about hopping on the chat. And as of course, as we get going, as Tony does a presentation, feel free to use that Q&A to ask any questions that you like. Tony has offered up the PDF that you're going to see here. So after the call, I'm going to send that out to you guys. So appreciate you kind of keeping that to yourself. Highly valuable, and he's entrusting us and you with it. So appreciate you kind of keeping that to yourself and using it as best as possible to help grow your business. So one thing we always do like to do on these webinars, however, is get things going with a poll question, just to get a feel for what you guys are experiencing at the dealership level. So if you wouldn't mind, there's just going to be a couple of them as we go throughout the presentation here. The first one is dealers only. I know we do have some industry folks on, so this one is for dealers only, though. Describe your pre-owned unit sales performance for the month of June to date. So we're just looking at June pre-owned sales here. If you wouldn't mind just taking a couple of seconds, and we'll share the results here with you as we get them, and then I'll also provide you with a little recap here in the next business day or two as we get those going. So fantastic. So Tony, just to start, as you see the results here, so 40% of the attendees say their pre-owns above plan. Actually, it's 50% now as we get get the results here in real time. So half are above plan, another third are on plan, and then about 20% or so are below plan. So just to start, how do those numbers sit with you?
Yeah, I mean it's indicative. First, Dave, thanks again for having me on. It's always a pleasure to chat with you. It's kind of cool. You and I got to connect last week in Minnesota. The weather is finally at a point where us soft Californians can enjoy going up to Minnesota. But it was nice to chat about a lot of these things. And I think to your point, like one thing that has been pretty consistent throughout this year is dealers seem to be making pre-owned a priority. We at NPA, we've been obviously huge proponents of the pre-owned portion of the business for, well over, 2 decades. And it feels like within the last 2 to 3 years coming out of COVID that there's more dealers engaged in understanding, becoming more proficient with pre-owned than there probably has been, at least at any point in time that I've been with the company, which spans almost 2 decades.
Sure.
Again, I think it's not, I'm not surprised that a lot of dealers are engaged and are doing better with their pre-owned this year than they have in previous years.
Awesome. Yeah. I mean, I'm talking to dealers every day, bringing up pre-owned, bringing up new unit inventory,
Yeah.
and it's pretty steady when it feels like it doesn't go more than a week or so when I hear that pre-owned is their best OEM in the shop. I've
Yeah.
heard that
Yeah.
now, and I've heard that over the past couple of years at times, depending on the dealer. Is that indicative of kind of what you've been seeing?
Yeah, I mean, I would say what pre-owned absolutely does is gives a dealer control, right? You've got stocking requirements and dealers are forced to answer, especially, dealers that are multi-franchise, they answer to a lot of different masters. And so juggling all of those things becomes difficult. With pre-owned, dealers have full control, right? They get to stock the units they want to stock. They get to have as many as they would like in inventory. They can mix and match models. They're not required to carry one brand versus another. So like that level of control, I think, is why dealers feel like they like pre-owns.
Yeah.
much, at least the dealers that are super proficient. The other side of that coin is it also
Yeah.
means there's a lot more responsibility, right? These dealers are responsible for making sure, they're controlling things on their end and being responsible with how the inventory is flowing in and out. So, control in my perspective is always a great thing. We're in the auction, and so we're probably the best version of what a free market looks like. So the ability to control and have the influence over your inventory and how long you stack it and what it's stocked for, I can see why dealers are pretty positive about pre-owned.
Yeah, that's awesome. That's a perfect kind of introduction to what we're going to talk about today. So, if you want to go ahead and pull up the PowerPoint there, we can start sharing with the audience. Tony's got a great stack of data and insight. Obviously, we know we're coming here to see some data from NPA, but to me, over the years and having talked to dealers, it's the insight and the strategy and the smarts that you get from talking to guys like Tony, and maybe even just listening to folks like him too. So, and yeah, just wanted to point out too that again, you're going to get the PDF, and if Tony, if you can go one more, just to give a shout out to all of our partners here at the NPDA. As I mentioned, it's all about education, development, growth, and excellence. And if you've come for any of those four descriptors, then you're in the right spot because we're going to take care of you in all four of those areas here today. So, yeah, again, thanks again to our partners who have helped us launch this Edge series. If you're joining us for the first time, welcome. I know there's a lot of returnees, a lot of guys and gals who haven't missed a webinar yet. So appreciate that. That's been awesome. And yeah, so we'll be on the lookout for the registration emails for the July webinars. And yeah, we'll go ahead and get started there, Tony.
For sure. Appreciate it, Dave. Yeah, I think one of the things that I'm really cognizant of is that I have access to a lot of data and information. And so while some of these things may be aha moments or, you see an awakening in folks when things resonate, one of the benefits to being part of NPA and also being a partner with the NPDA is we get to share information back and forth. So the ability to help dealers understand what's happening not only, in their stores and in their markets, but kind of globally across the spectrum and within the industry, I think it's beneficial because more often than not, the struggles that dealers are having in their dealerships, they're not unlike what other dealers are seeing. And I think they also start to understand that, hey, there are some things that I am doing better than the rest of the industry. There are things that are being brought out that I've been doing for 10 or 15 years in my store, or maybe those are things I can adopt to get better. So any way in which, NPA can help and be a great partner with the NPDA, we're always huge proponents of that. And I think this is just part of that process of sharing the general information that we're seeing in the marketplace. So I guess I'll jump right into it here, Dave.
Yeah.
So just a quick recap, like Q1, Q2 market update, right? So by and large, the performance that we're seeing at the wholesale auction, pricing is mirroring what I would call like normal historical trends, where we see this peak in spring, and that's echoed across all of the different product spectrums. The one thing that was slightly different this year, or I should say in the last 12 months, is we started to see the market tick up a little bit earlier, right? And in retrospect, looking backwards at Q3 and Q4, in light of what has happened and what we're hearing from dealers around pre-owned, is that dealers really saw pre-owned as an opportunity. And then also from a consumer perspective, customers are tending to be more value oriented. And so one of the things that we looked at was, well, if the season may have started a little bit earlier, 45, 60 days earlier, where we saw an uptick in October, November, December that we typically wouldn't see until we crested the first of the year, that there was a potential for the season to end a little bit sooner, where we could see values come down like in, April or May. And by and large, I would tell you we haven't seen that. The market's been pretty robust and strong. And so through the first 6 months of this year, you can kind of draw the normal seasonal trend, and the marketplace has pretty much followed that. In terms of where pricing lies related to 2019, which is kind of our normalcy gap, where we're like, okay, hey, 2019 was normal. There was some madness that happened during COVID, and where are we now and compared to those two data points? And so versus 2019, you can see from a pricing perspective, average sale price, you'll hear me toss that out, ASP. ASPs are up about 10% across the product spectrum, and I'll have a graph that illustrates that. But obviously down significantly from where they were in 2021, which is kind of the peak of the COVID pricing. 21, 22 is where we saw stuff kind of shoot through the roof.
Sure.
supply chain issues were the flavor of the day. That's all anybody wanted to talk about. And so we saw a reciprocal rise in pre-owned pricing during that. That was just abnormal, right? But right now, the market's sitting squarely back where it's above 2019. It is in alignment with where we were in 24, but way, way down from kind of the COVID highs that we saw. Part of that is really because of what we're seeing on the new unit side. The industry is projecting that we're probably going to be low to mid single digits off in terms of new unit retail versus where we were last year. But
Sure.
again, that's still significantly up from where we were in 2019. So, there's some things there where the recency bias of what we experienced in COVID and what we maybe even saw last year, we're like, man, this year isn't as good. But when you look back to that normal comparison using 2019 as kind of the litmus test,
Right.
things are still doing really well. The issue that we run into, and again, I have some visuals that associated with this, and it's something that you and I talked about, before we hopped on here, is just inventory. There is so much inventory in the pipeline, and where there have been OEMs that have been proactive in reducing wholesale shipments and working with dealers on ways to get rid of some of the new inventory that may be aging in their dealership floors. Other OEMs have been quick to kind of refill stock and put their inventory in those gaps.
Sure.
And so by and large, right now, the inventory is 3 to 4 times what it was of 2019, using that again as a normal reference. The good side of it is, and this was kind of something we started with before we even jumped into the presentation, is pre-owned has kind of remained a buoy for many dealers in terms of retail sales, right? And a lot of that has to do with the new inventory challenges, which are related to like interest rates and things like that, right? The Fed recently came out here and said, hey, we're not going to make any meaningful adjustments to interest rates. They're going to stay the same and we'll reevaluate here in the next quarter. And so the consumer, which is squarely focused on what happens on a monthly basis with their payment, it's not uncommon for a consumer, even one with very good credit, to be paying 14, 15, 20% interest on vehicles. And so an asset that costs 30 or $40,000 on the new side, but on the pre-owned side, maybe 10, 11, 12, $15,000 on a percentage basis, they're doing much better in terms of their monthly nut that they have to make for these payments. And so more consumers seem to be turning to pre-owned. There seems to be a lot of interest. And obviously the data bears that out in what we're seeing in dealer participation and valuations being a little bit higher, but also just in communication and talking with dealers. The feedback that we're getting is pre-owned is still good. The spring was a good selling season for guys. And so I feel like, the pre-owned interest awareness and also the amount of dealers that are becoming more proficient in pre-owned feels like it's kind of peaked. Like we've reached a fever pitch with dealers where all of this collective effort, the things you guys are doing, I made reference to the number of dealer education and training seminars we've been a part of at NPA and sharing data information. It feels like we have a dealer network that is way more aligned, that if they're not actively engaged in pre-owned, that they're missing the boat and there's an opportunity to make some money, but also to become better operators. Because we've always been full proponents that whether you sell pre-owned as a priority in your store, pre-owned really helps you keep the lights on, manage inventory, take trades, which leads to new unit sales and all these other things. And so it's kind of a really good litmus test when you find a dealer who is a good pre-owned operator, that they're generally a good operator all the way across the board, whether it's in their service department, new unit sales, all those different metrics.
Yeah,
So,
I, I
um,
I agree. Just from a interview perspective and hearing about the ones who are effective
yeah,
pre-owned, they're effective at a lot of things. You did mention the sourcing, so I just want to throw up another
yeah.
poll here, if you guys wouldn't mind taking a couple of seconds. How has the volume of trade-ins you're taking in 2025 trended versus 2024? So again, this one's for dealers only. If you wouldn't mind taking a couple seconds and just providing your feedback that we'll share here as we get a handful of responses in. So we're asking, how has the volume of trade-ins you're taking in 2025 trended versus 2024? Um, and let's see here. So, yeah, so significantly better. We have right around 20%. Slightly better is about 40%. Slightly worse is about half. And then, fortunately, there's nobody who checked that significantly worse button. So, um, yeah, I'll share these with everybody here. Thanks, everybody, for taking the time to answer. It's super helpful for us. And then we'll share the results here so you can take a look yourself. Yeah. So, Tony, the ones who are in that slightly or significantly better, that's a good sign. What are some of the, from your experience, some of the effective ways that they're able to capitalize on the trade-in?
Yeah, well, I mean, the ability to take trade-ins, to put accurate values, to understand, where you are and what a unit's worth, that helps dealers in getting new unit sales done, right? So, we've history has taught us that the more new unit sales that happen, the more trade-ins that flow in, just from a valuation standpoint, right? It's harder for a customer to walk in with again, a $10,000 asset and trade that in on a $15,000 used asset than it is if they're trading it in on one that is brand new at 30 or $40,000. And so we see higher trade-in rates historically on new unit sales. But a dealer's ability to be able to pencil and work a deal directly relates to not only the number of sales that they're doing, but also their profitability in every one of those units. So I'm glad that we're seeing dealers that are doing better in terms of seeing more trades, taking more trades. The slightly more worse, my gut is in talking with dealers because new unit sales have kind of been a challenge this year. I referenced they're going to be down compared to last year. Because that has been tough, that does also explain why maybe some of those dealers aren't seeing the volume of trades that they had before. They may be actively pursuing trades, working pre-owned, doing that kind of thing, but the volume of inventory that they can take in because they're selling less new is probably impacting the number of trades that they're seeing. And then the other side of that, which is more anecdotal feedback than anything else, but a lot of dealers are still dealing with customers that bought during the COVID time and paid premiums above MSRP values. And as you can see from the chart in front of us, as those values have kind of normalized, right? That depreciation, which did not exist for 2 years in 20 and 21, it's come back and it's sucked a lot of the value that the customer thought they had in the vehicle when they paid 125% of MSRP for the unit, right? So it does become harder for a dealer to turn a trade when the customer's upside down significantly. And so I think that also has somewhat of a negative impact on the availability for a dealer to source trades. But, by and large, and the chart illustrates this, that you can see the red line, which represents 2025. And again, we're looking at average sale prices. What I've done here is I've kind of looked at like the major brands. There's about 10 or 15 major brands lumped into that. I'm looking at a segment is that's kind of 0 to 10 years old and is good condition, right? So by and large, what a dealer would expect to buy at the auction and then turn into a retail vehicle. You can see the trends between 25 and 24 are pretty normal. There's not a lot of deviation. Even from the green line, which was 23, those seasonal trends are very, very normal. Obviously, like I stated earlier, off significantly from the yellow and silver lines, which represent the COVID highs, but still above the blue lines, which are 18 and 19, right?
Okay.
Which we would consider normal. So still very, very good numbers in terms of average sale price strength. And again, whether you're a buyer or a seller at the auction, you could have a different opinion. Buyers have been telling us, hey, we're still having to pay a premium for good quality inventory.
Right.
At the same point in time, what we have heard is dealers are able to charge a premium to customers for retail ready vehicles. And so even though these prices might be rising through wholesale, they are typically reflected in what happens on the retail side, and that you'll see some incline in pricing for good solid units, especially as supply gets tighter and tighter, which we know is happening this year. The other piece of it that I'll just kind of share with you, Dave, is just in general the trend. You can see that we're coming down from the apex of pricing, and we're getting into kind of what we would traditionally see the summer months. And regardless whether it was COVID, non-COVID, or what we saw last year, the trends follow the same direction, in that we expect pricing in June, July, August, September to continue to kind of taper off as we all leave the retail season and go into kind of preparation for the following season.
Right.
A lot of parts of the country, which you know very well in Minnesota, the weather becomes a challenge as we get into the back half of the year. And so doing things outside, whether it's, on a side by side or a bike, it becomes tougher to do. And so dealers shift their mentality, and we usually see, pricing kind of fall off towards the end of the year.
Right.
And our expectation is that we'll see a similar thing in that red line as we kind of get into July, August, and September. Just as a point of reference, historical norms are kind of 5 to 7% declines in ASP month over month until we kind of get into that September, October level where they kind of level out and then start to slowly creep back up as we get closer to the year end and get into spring.
Right. Yeah.
But the other thing that I'll point out here, which is illustrated in the next slide, is there are differences by product category. And so you can see the top left is domestic cruisers. That's, Harleys and Indians. Metric cruisers on the top right. UTV side by sides on the bottom left. And then, of course, MX and dual sports off-road bikes on the bottom. And again, we're looking at 3 to 5 year old units, good condition, major brands. And you can see the trends are similar, but the impact in relation to how much they're shifting or have shifted to this point in years pretty significant. So I'll call out a couple things just for the audience here. One, Harley prices have stayed pretty consistent. Our expectation is they're going to mirror what they've done in 24. The new business on the Harley side, like we're hearing from dealers, is still very, very challenged. But the used side has been robust, and we're even hearing more non-Harley authorized dealers heavily investing in Harley Davidson pre-owned product. And so I think that's helped keep those values strong. On the metric cruiser side, we're seeing a little bit different. You can see that that line has started to deviate lower at a much more rapid rate. There's a couple reasons why. One, during COVID, prices elevated, and for most of the street bikes, which are represented obviously by, Kawasaki and Yamaha and Honda and Suzuki, right? Those major brands, those prices stayed elevated for a much longer period of time. And so I think what we're starting to see is some of that COVID value is starting to finally get sucked out of what we're seeing on the pre-owned side for metric sport bikes. And so we do anticipate that we're going to see a pretty steep decline, even more so than we're seeing in the general power sports bucket in that segment, because they've remained elevated from an ASP perspective for an extended period of time, right? On the UTV side by side piece, much flatter performance. And again, that has to do with the fact that we're lumping together sport side by sides and, commercial agricultural side by sides together. And so the seasonality tends to be a little less muddled. It still exists where we see the peaks and springs and the valleys kind of in the back half of the year. But our anticipation is that there will probably be a little more decline as we continue to see kind of that promotional activity ramp up in the side by side space. A lot of OEMs have gotten very aggressive because there's so much new inventory on the side by side portion of the business.
Sure.
And I think as those things kind of ramp as they normally do in kind of Q3, Q4, that we could see some of that impact values on the side by side piece. And then finally on the MX and dual sport side, just to kind of round out what we're looking at here, you can see that we're actually below 2019 levels in terms of average sale prices. There's been many OEMs, one in particular that has had some challenges here that's been in the news about whether or not they'd be in existence, right? And so I think that that motocross off-road motorcycle business, which absolutely boomed during COVID, took the biggest hit of probably all the different segments coming out of COVID.
Right.
And so I think they've probably been more depressed, generally speaking, the values on off-road bikes than probably anything else. And I don't see anything in the data that would suggest that the trends that we're seeing in 25 are going to all of a sudden correct or change course and all of a sudden be better than they were last year versus 19. So I do think that market specifically for kind of the off-road bikes, that cleaner, newer stuff is going to be a little harder hit than probably any of the other segments out there.
Yeah. I know just looking at our list of attendees, thanks everybody for joining us again here on the webinar. We have a lot of strong off-road dealers on here, so I'm sure this intelligence and information share is super helpful to them. So appreciate that, Tony.
Yeah, for sure. And I mean, what I would take away if I'm a dealer, right, is okay, if I'm going to be selling pre-owned or if I have pre-owned, right, like these market conditions, what should I expect to happen to the value of the assets I currently own, and what should I be paying customers for trade-ins, how I should be paying for vehicles that I'm sourcing, whether it's to the auction, from other dealers off the street. Like this is a really good indication of how you need to adjust your pricing for the next 30 to 90 days in preparation for what we expect is going to happen in the marketplace, but also that inventory management. If you're sitting on stuff that you bought in February, March, you're already at a position where you're probably, 14, 15 points upside down. That isn't going to correct. And so my suggestion is inventory management and turning that stuff as fast as possible and replacing it with stuff at the current market values will help mitigate losses across the board for inventory that's been aging.
Sure.
Um,
Super helpful insight. Appreciate that.
Yeah, for sure. A big driver of this, and what you're looking at is this is DMS data that we source from a couple different DMS providers. As many of you are aware, Lightspeed is probably the biggest provider of DMS services and systems to dealerships. And so the majority of this information is coming from Lightspeed source data. And so what we're looking at here is the blue lines are new unit unsold inventory sitting in dealerships on a monthly basis. And then those reddish lines are new unit sales. And so if you look at 2020 and 2021, those red and blue lines come really close, where the red lines come close to meeting or eclipsing the blue lines. And that's indicative of what we were hearing and seeing from dealerships where they're like, hey, I don't have any inventory. There's supply chain problems. I need everything I can get my hands on. You can see from 2020 all the way through to where we are today, we've rebounded in terms of inventory. And if anything, we're now running at a much higher level of excess in terms of inventory in dealerships, with not a lot of meaningful change happening in terms of unit counts on the retail side. And so what this means is we're at a position or a point in time now where we've got more inventory in the general industry channel sitting in dealerships than we've had probably at any point in time going back to 08, 09. And so I'm not suggesting that there's this massive issue or problem that could manifest like it did in 08, 09, but this is a concern that I think all of us as an industry are going to have to figure out how to deal with. And part of that is OEMs working with dealers on incentives and lenders and promotions to be able to digest this inventory. But it also has to do with wholesale shipments and OEMs understanding that it's like, hey, if we want dealers to take 26s when we change over model year, we have to help them with the 24s and 25s that are sitting in dealerships today, because the retail demand just hasn't ramped up the way that inventory has.
Right.
Another data point that I'll throw out in relation to this, which is important, it's not exactly the same, but it does correlate, is we work with a lot of the wholesale floor plan providers. So those folks that finance dealer inventory, and just in round numbers, 10% of a dealer's inventory in a healthy year is aged. Aged is measured as a unit that is over 365 days, right? So most of the inventory is less than that. 9 out of 10 vehicles in a dealership should be less than 365 days. So that 10% threshold is a healthy indicator of where the marketplace is in power sports. Right now, we're running double that, where 20% of the inventory is over 365 days in inventory. And so that all associates with costs for these dealers, right? So again, whether it's used or new inventory, we've got more aged inventory sitting in the pipeline, which makes dealers less profitable because they're paying juice every month on this stuff. And so proactively, all of us as dealerships, as people within the industry, working to fix this problem, which is the headwind of too much new inventory sitting in dealerships. This is something that we're all going to have to work on through the back half of this year to be able to get things back to normal and making sure dealers are profitable.
Right. Um, from a pre-owned perspective, just from a turns standpoint, what are you guys seeing? Like, so you work with so many dealers, the ones who do it,
Yeah.
the ones who do it best, optimal situation. Yeah, what's a typical or a good turn goal or average to shoot for
Yeah,
for
so
pre-owned?
it varies. It varies pretty widely from whether a guy's an off-road dealer and an on-road dealer, but I think the window is kind of 60 to 90 days, right?
Okay.
If a dealer is proactively managing your inventory on the pre-owned side, 60 to 90 days, they're not going to be over leveraged into product, right? If you've been sitting on a bike or a side by side or an ATV for 120 days, you've gone through two book changes, and then the market is probably adjusted in the scenario that I've outlined earlier, where if I bought a unit in March and it's July or August, I could be 20, 30 points upside down in valuation on that unit. And so keeping things fresh on a 60 to 90-day turn is what is best for dealers, in our opinion, and what we find really good operators, the guys that are on top of it, some of the really, really high functioning on-road dealers, a lot of the Harley dealers that we work with, they're running off of 60-day turns, right? They don't have anything in inventory that's going beyond 60 days from a pre-owned perspective because they have that level of control of what happens over the inventory.
Right. And then I got just one more poll question for you guys related to the chart here. So just talking about new unit sales outlook, what's your outlook for new retail sales volume for the remainder of 25 versus 24? So if you guys wouldn't mind taking a quick second here, dealers only, of course, uh, including folks like Chad Thompson and Jason Davis.
I love that you're calling
Uh,
people out by name, by the way.
yeah, yeah, that's awesome. Bob Keys joined us. Appreciate that. Kim Harrison, making sure everything's going swell here. So yeah, thanks again, everybody, for taking your time today. Uh, and Brian Fisher as well. Awesome. Thanks for hopping on board. So taking a look at, thanks someone who closed this one out here, and we can take a look at the, share the results. There you go. So what's the outlook for new unit sales? Significantly better is a quarter out. So yeah, 25% say they have a significantly better outlook. Another quarter say slightly better. And then, so that's half of them. Slightly worse is about 40%, and significantly worse is fortunately only a, little bit over 10%. So just yeah, Tony, your feedback after hearing kind of what the new unit sales outlook is for most of these folks.
Yeah, it's not surprising. You and I were talking kind of pre-call, just about like some of the dealer feedback that we've been seeing and hearing. And I think that those level of mixed results are indicative of what's happening. We have some dealers that are doing really good, in certain parts of the country on the new side, in terms of unit sales. And we have some dealers that are really struggling with some brands in different parts of the country. The two things that I know that is consistent is there's been significant margin compression on the new side. That seems like dealers, even though ASPs and MSRPs for new units have continued to rise kind of consecutively year over year, we're in a season where margins are much more compressed than they were, especially during where they were during COVID. I actually have some data information that I can share around that. But what we're seeing, I think, is that most of the new unit sales, which again, I talked about the industry projecting being down maybe 3 to 5% single digits from where it was last year. Much more of that market share is being driven by promotions incentives on the new unit side. And so I hate to use the term buying market share or buying deals, but a lot of what we're hearing from dealers and seeing in the data is that these new unit sales are spurred by massive incentives and promotions that OEMs are pushing out there. And I say that not as a negative, because I do think it is part of how we digest what this chart is showing you. All that inventory that's built up at the dealership is we've got to throw money at it as an industry. We have to come up with creative solutions, but it does have an impact, right? Profitability per unit comes down, and then also the ability for to take trades and do things that has an impact on it as well too. So while I do think that promotional activity is needed, there are repercussions from being so incented for a customer to be able to buy a new unit today.
Sure. Appreciate that. Uh,
Yep. Sorry, I didn't mean to cut you off there,
oh no, yeah,
Dave.
you're good. I was just finishing up the poll. Yeah, so we're good to go.
Yep. So, all of this, what do I think is going to happen? What do we at NPA, what are we telling our customers, our dealers? Where do we think people need to be prepared, right? So, I think pricing is going to behave generically very normally, right? So those trends that I shared with you, I think we're going to follow the same trends. There may be more value that could be sucked out in the back half of the year in terms of ASPs, but not necessarily from things that are happening with the industry. There are a number of things, tariffs, interest rates, the specter of foreign war that are happening that are outside of our control that have an influence over what consumers are doing. So as things become more tumultuous, it tends to make consumers it tends to make consumers sit on their hands, right? So if someone's like, man, I really want to buy something, I've been in the market to get a new razor, a bike, whatever it might be, if I'm worried about my job, the economy, the stock market, us as the United States being in multiple wars, like that makes me sit on my hands longer than I would. And so some of those things could have an impact on things as we get into the back half of the year. I will say, just from a metrics perspective, I do think some of those metric brands are going to see more compression because of the COVID bubble that it seems to have finally popped in those brands. I think used values for Harleys could hold up a little bit stronger because we are seeing more interest from a larger volume of dealers in used Harley Davidsons. And then the other piece of it is just wholesale inventory. Like we could see things float up a little bit through the auctions just because I think dealers are more attuned and aware of the fact they need to manage inventory better. There's a lot more pre-owned inventory in the pipeline than there's been the last couple of years. It hasn't reached the same levels or the extremes that we're seeing on the new side, but we have more pre-owned inventory in the channel, and hopefully, like we've suggested, dealers are managing that better. And so, with more inventory in the pipeline, we're hopeful that we could see more inventory come back through the wholesale channel. On the financing side of things, flooring's going to become a problem the back half of this year with all that new inventory sitting there. And so, um, if you're a dealer, you should be doing everything you possibly can to liquidate as much inventory as you can in the short term. We've got about another 30 to 45 days of what I would call peak-ish selling on the retail side. And so if you can move inventory, even if it's at a slight loss or at basically no margin on the new side, you should be pursuing that as much as you can. Again, this promotion and incentive activity, take advantage of it if you're a dealer, because I think it'll continue and it'll have some market impacts towards the back half of this year. There is some potential for recession because of those larger macroeconomic things that I think are blooming out there that we just don't know. If anything, I think that all of these things make people hesitant, and so it could have an impact on their overall discretionary spending. One of the things Jim Woodruff, our CEO, that he includes in these, which I did not because you can go and find this through his charts, but Fred data suggests that more and more people are spending money on their discretionary money on things to do, traveling, cruises, restaurants, right? I went out to dinner with my wife on Tuesday night, and for the two of us to have dinner, and we did not drink alcohol, was $120. So again, that's we didn't go out, we weren't eating at McDonald's, but we also weren't at Ruth Chris, but that's indicative of what somebody can expect to pay to go have dinner. And so people are using more of their monthly economy to do things like that, paying for groceries. And so that hurts discretionary spending that would be associated with large purchases, a motorcycle, a side by side, whatever it might be. So as long as these things are looming out there, the likelihood that we have some kind of a mild recession, that probability grows larger and larger the more this kind of stays in our visibility.
Sure.
And then the other piece of it is I hope that we do see some shifts in interest rates. I think everything is suggesting that we will see some mild declines in interest rates the back half of this year as the economy is affected by all these things we've been talking about. I think the Fed's keenly aware and is looking at a number of different things like unemployment. And I do expect some reduction in the Fed rate, which should help with finance rates, which obviously the vast majority of our customers that are buying these vehicles, they're choosing financing as a mechanism to pay for it. So as that gets better, that is a positive or a tailwind that could help us move some more inventory the back half of this year. So I hope that's helpful, Dave.
Yeah, Tony, with the between our dinner meeting last week and a couple of dry runs here this week, I was anxious for everybody to kind of get the insight and be able to capitalize on hopefully their NPDA membership. And if they're not currently doing business with NPA, you guys definitely need to consider that. Kind of along, I know you talked about the turns, for that optimal pre-owned dealer. What are some guys doing so you've got the new units that aren't moving? Are they turning, I mean, are the good ones turning to you guys from a auction standpoint with
Yeah,
regular?
I mean, most of the inventory we sell is obviously from a pre-owned perspective. We don't sell new units, generally
Right.
speaking, right? We do have some factory programs and work with some OEMs to move through some new inventory. But, in terms of dealers, again, my suggestion is there are a number of avenues that dealers can turn to trying to put their new inventory in the right size. One is working directly with your OEMs, right? Like, hey, look, you want me to stock 20? I've had 20 for 3 months. I can't take any more. What promotions and incentives can I use? The other piece of it is there are dealer locator systems in every one of these floor plan providers and DMS providers that are out there. So, if you're a dealer who actually is doing really well, it's a great opportunity to buy some new inventory potentially at a slight discount versus what you would have paid versus dealer cost. But also for those dealers that are sitting on enormous amounts of inventory where they feel uncomfortable, you've got a network of dealers at your disposal that have the eligibility to buy those things. And so I would use and suggest those tools on the new side. On the used side, use the data and information that we have available to you, whether it's through our value guide services, our direct buy, which is a great trade-in evaluator to help you give the customer more value. And again, if you're not actively taking every single trade that's coming through your dealership or that's been put through on your website, utilize those tools to increase your efficiency because that can help you sell more new inventory as well too. So there's just a number of avenues that can help. There are no silver bullets, right? There's nothing out there that's like, hey, press this button and that problem disappears. But I do think that the availability for a dealer to have a desire to consume this information and then to ask questions and understand how they can put it in application at the dealership level. Those are the first couple steps that a dealer can take. And again, inventory management, do whatever you can to keep those turns as tight as possible because we're going to go through a season of transition right now with ASPs and pricing and retail. And so the quicker you can move through inventory, the faster that you can change the overall makeup of your inventory in terms of how much it is costing you is going to behoove you as we get into the next, 3 to 6 months.
Right. And along those lines, if you guys are finding this to be valuable, make sure you do join us at the NPDA Dealer Connect, September 21 through 23 in Columbus, Ohio. I had the first one last year, went off like gangbusters, and this one is going to be multiple times better. So do hop on the website and check out. I know we've got a couple of NPA sessions. They're going to have these types of updated charts and a bunch of staff on hand to have personal conversations with, and they're always willing to share that. Yeah, so Greg Gordy from Seabreeze Harley, Tony's asking, do you have any DMS data showing the average pre-owned inventory age across power sports dealers? Is there any similar data from before and during COVID as a comparison? So yeah, average pre-owned inventory age.
Yeah, absolutely. There is a field on here, and it's not directly related to your question, Greg. It doesn't show like the average age, but I think it's worth bringing up and just sharing with you so you can take a
Cool.
look at it.
Oh yeah.
I'll pull it up here, and then I'll make references to kind of what it's showing.
Tony told me he was going
Let's
to have a couple extra slides in his back pocket, so that's a perfect question, Greg.
Yeah, so this is the same data segment that we looked at for new. The two things that I want to call out, it's the same period of time, right? So it runs from 2020 through 2025, and what you're seeing is used, unsold inventory sitting in dealerships, right? And you're like, holy cow, it's way higher than it was. There's two things that I want to call out. One, the reference point on the left-hand side of this chart. This is about a tenth of the total volume that we saw on the new side. So that scale for new topped out at about 200, 250,000. This tops out at 35,000. So just on a per dealer basis, the amount of inventory at each store is drastically less on the used side. The other piece that I'll point out is it's actually moving in the right direction. A direction that you would expect to see is that we had kind of a big ramp up and then it's slowly getting better and better. You can see pretty much month over month, the total level of used inventory has declined since we hit the peak basically in November and December of 22. The other part of it that is not in this, but is absolutely true in the data, is on the new side, it's roughly the same number of dealers that are stocking new inventory. So you can say same store numbers, same store numbers. Yes, you can have some fluctuation in churn, and there could be more dealers on the new side, but it's less impactful. On the used side, what I would tell you is there is absolutely more dealers in this data that are stocking and sourcing pre-owned than there were in 2020. So it's not only same store data, this is global across the board. So for all those factors, even though the elevated levels of inventory as a whole are higher, I feel much better about this data because A, it's moving in the right direction. It's representative of a much larger subset of dealers that are stocking pre-owned. And then, of course, just in retrospect to how it relates to the total volume of new inventory, it's a tenth of what the new inventory volumes are.
Sure.
And so for those factors, I feel like this is a much better indicator that the pre-owned inventories are healthier. In relation to your question directly around the amount of time for pre-owned turns, I don't have that data in my hands right now, but it is something that I can source out of the data, and I'm happy to provide an update related to just average turns on the used side.
Yeah, perfect. And again, we'll get you these charts, and Greg, you'll have Tony's email on there as well, so you guys can continue that conversation. If anybody else has anything related to Tony's presentation, you can hop on the chat and do just what Greg did there. Otherwise, I think Tony, man, yeah, we do. Awesome. Follow-up question. How does the unsold used inventory compare to the volume of sales from NPA?
Yeah, so what I'll say is our inventory is up slightly over last year, right? Like so I would say generally speaking, overall auction inventory is probably up anywhere from 5 to 7%. So it's nominal. What I would say is probably more indicative is we've actually seen the volume of inventory that's coming from dealers tick down this year. So we've seen other segments, and for those of you who aren't familiar, NPA sources inventory from a number of different buckets. It comes from lenders through the form of repossessions. It comes from rental agencies, from insurance companies, and from dealerships, right? There's a bunch of other pieces in there, but the dealer piece is a big portion of the inventory that we sell, and by and large, that percentage, which is not massive, it's down this year. And so when we talk to dealers about, well, why, right? If we go to a store and we're like, hey, Dave, you sold 50 units through us last year. You're only on pace to sell 25 this year. Why has that changed? And the most common response that we're getting from dealers is, I'm keeping and selling more pre-owned than I was last year.
Hmm.
And the other piece of it is that I haven't been able to get as many trades as I got last year, right? And so a good portion of the dealer inventory that we get, depending on how you talk to, I would say it's probably 60, 70% of what we get is trades that a dealer's like, this isn't something that I would retail in my store, right? Or I've had this for a while. I thought I could sell it. I can't sell it. So they end up moving that to auction to liquidate it because the value proposition just makes sense for them. The issue that we're having is dealers, as we kind of saw in the poll questions, they're having trouble getting more trades. And so we're seeing more activity on the buyer side than we are in the dealer seller side. And I think it's just from the fact that more dealers are becoming more reliant on pre-owned, but also they tend to be holding pre-owned a little bit longer.
Excellent. Hopefully that's helpful. Chad from Thompson's in Indiana. Appreciate you hopping on. What is the repo rate in 25 compared to 2019?
Yeah, great question. So a couple of things on that before I give the number just for context. One, like in the auto industry, there's no aggregate data, right? So in the credit reporting system, there isn't a specific bucket that says, okay, these are power sports or motorcycles. How do these perform like they would on the auto side? You can find auto repossession rates, default rates, delinquencies through the credit reporting. Our industry, we don't have the luxury of doing that, right? So all we can do is talk to lenders, aggregate information, and then look at the repo volumes and then ask them how that's relating to what they saw on the front end of the business, right? So cyclically, we saw a big spike in retail funding, just like you all did for selling vehicles during COVID, right? And so what we saw is the repo rate went at two historical lows, where basically there were no repossessions for, I don't know, 60, 90 days in 2020. Some of that was due to uh, some of the political things that were being put out there. Then they said, look, you can't do a repo. This is COVID. But also, people were flush with cash. And so they were able to make their payments. As all that is kind of dwindled, we've seen those rates start to come back to normal, right? And so you can actually go out and find this. There is a report that was put out by Cox Automotive, which is the major service provider for auctions in the auto industry, and they're projecting that repossessions and repo volume will be up in 26 versus 25. On the power sports side, we haven't necessarily seen that manifest, where our volumes are up slightly versus where they were the last few years, but not when you look at the level of originations that happened, right? So if originations doubled, we would expect defaults and repossessions to double. That absolutely has not happened. And so while our inventories have grown from that side of the business, they have not grown reciprocal to what originations did. I would tell you, by and large, lenders are telling us that all of those metrics are starting to return back to normal. Normal is about a 2% rate in terms of defaults versus originations, but I would still tell you they're below historical norms versus what we saw like in 18 and 19. The volume is up, but not in retrospect or looking at how much originations were up. So, Chad, I don't know if that answers your question, but we are seeing more volume, but based off of the amount of originations that have been put out into the marketplace over the last 3 to 5 years, we would have expected more, to be honest with you.
Cool. Super helpful again. Thanks for the questions. And just give everybody another couple seconds here if you have one final one for Tony. Otherwise, man, yeah, thanks everybody for taking the time. We always want to recognize that 45 to 50 minute time frame that we're committing from you here. So thanks again for that. We had a lot of folks on from a lot of different places. And yeah, without further ado, hopefully we'll see you guys at Dealer Connect in September. And again, Tony, this has been awesome, super insightful as always. Always enjoy the interviews and kind of getting smarter about this whole segment of the business. So yeah, thanks, Greg, for participating, and we'll get you guys the PDF here this afternoon and the poll information here within the next day or two. Appreciate it, Tony.
Thanks, Dave.
All right, we got a, clap emoji even coming on here. So yeah, thanks, Andrea, for hopping on once again. I know you're a multiple time participant here, so thanks for joining us on this one too. And awesome. Yeah, we'll go ahead and wrap this one up. Thanks, everybody.